Stop scrolling. Quick question. Ever felt that gut punch when you see everyone else winning? That stomach drop when the chart goes red? And that burning fire that says, I'm next? That's not just finance. That's your brain. Welcome to the market's secret weapon. You. We're not talking boring stocks and bonds. We're talking psychology. Why do people buy high, sell low, and basically YOLO their life savings? Alright, let's start with something you probably know all too well, social anxiety. Think about it. You're chilling, minding your own business. Then your group chat blows up with plans you weren't invited to. Or everyone at school is suddenly wearing a specific brand, and you feel out of the loop. That's social anxiety kicking in. The fear of being judged, excluded, or just plain missing out. Now translate that to investing. It's called herd mentality or bandwagon effect. Imagine everyone on Twitter is hyping up a new meme stock, Dogecoin back in the day, or GameStop. Prices are soaring, your friends are talking about buying Lambos, and suddenly you're thinking, wait, am I supposed to be in on this? Am I going to be the only one left out when everyone gets rich? That feeling, that's the investing version of social anxiety. You're not investing because you did solid research. You're investing because you don't want to be the only one who didn't. You're following the herd, even if you don't know where they're going. This leads to bubbles, when prices get artificially high just because everyone is piling in, not because the underlying value is there. And what happens when the herd panics and runs the other way? Crash. So next time you feel that urge to buy something just because everyone else is, pause. Ask yourself, is this genuine belief, or is it just the social anxiety of the market whispering in my ear? Okay, let's talk about something a bit heavier, but crucial. The investing equivalent of a panic attack. You know that feeling when everything suddenly feels overwhelming? Your heart races. Your breathing gets shallow. Your brain just goes into fight or flight mode. Maybe it's a huge deadline or a public speaking event. It's intense. Now, apply that to your money. Imagine you've invested in something and suddenly the news is terrible. Market crashes. Recession imminent. Your portfolio value starts dropping faster than your phone battery at 2%. Your brain goes, red alert, danger, get out, sell everything. This is the fear factor in investing. It triggers the same primal response as a physical threat. People start selling, not because the company they invested in is suddenly worthless, but because they're terrified of losing more. This mass selling then pushes prices down even further, creating a self-fulfilling prophecy. It's a market-wide panic attack. Example: think about March 2020 when the pandemic hit. The stock market tanked globally. Many people panicked and sold off their investments at huge losses. But those who held on, or even bought during the panic, often saw massive rebounds as the economy recovered. It's tough, but understanding that this is a psychological reaction, not always a rational one, can help you breathe, step back, and evaluate the situation calmly. Sometimes, the best move during a panic is to do nothing, or even to see it as an opportunity. Finally, let's talk about something that drives us all. Ambition. We all have it. That fire that makes you study for that big test, or practice endlessly for a sport, or grind to build your dream side hustle. And it's powerful, it's motivating, and it can be super beneficial. In investing, ambition often translates to wanting to pick the next big winner, to get rich quick, to outperform everyone else. This can lead to something called overconfidence bias. You've probably felt this after a small win. You ace a pop quiz, and suddenly you think you're a genius. You guess one right answer on a game show, and you're ready to take on Jeopardy! In investing, maybe you made a little money on one stock. You start thinking, wow, I'm a natural. Geez, I've figured out the secret. This can lead you to take on too much risk, ignore warning signs, or put all your eggs in one very speculative basket. This isn't necessarily a bad thing, but unchecked ambition can lead to risky decisions. You might chase incredibly high returns with super risky investments, ignoring the fundamentals. You might ignore expert advice because you think your gut feeling is superior. A healthy ambition, combined with self-awareness and a willingness to learn, is crucial for long-term investing success. It helps you stay disciplined, continue learning, and set smart financial goals. Just remember that the market doesn't care how smart you think you are. So, there you have it, the investor's brain, broken down using feelings you already get. Don't just follow the crowd. Don't let emotion dictate your long-term strategy. Stay humble, stay curious, stay diversified.